All companies raising funds from US investors have to register their shares and other securities with the SEC. This lecture investigates how the private placement exemption is used to avoid registering shares that are sold in venture capital rounds and other private rounds of funding. Regulation D is a safe harbor provision that allows companies to raise funds from accredited investors without registration. The securities regulations are aimed at protecting smaller and sophisticated investors, so only the wealthy accredited investors qualify to invest in risky startups. Accredited investors are corporations with more than $5 million in assets, individuals with more than $1 million in assets, or an annual income in excess of $250,000. A director, partner, or officer of the company is considered an accredited investor, whether he or she is wealthy or not. The essential rule of private placement is that you need to focus on accredited investors, and you're not allowed to solicit the offering to the public. There are, in fact, several variations of the Regulation D exemption. Rule 504 applies to smaller rounds of funding. Under Rule 504, a company is able to solicit its shares and sell them to non-accredited investors, but it is restricted to raising less than $1 million in a 12-month period. If you're raising more than $1 million but less than $5 million, Rule 505 may be the best option for you. You're not allowed to solicit and promote the offering to the public, but Rule 505 allows you to raise up to $5 million from accredited investors and up to 35 investors that are not accredited. The amount of funding you're able to raise under Rule 506 is unlimited. However, you can only sell to up to 35 non-accredited investors, and those that are not accredited must be sophisticated. This means they're capable and experienced when it comes to investing in similar companies and fully understand the risks involved. Although this is not an IPO and a full-blown registration statement is not necessary, the SEC does want to receive a Form D containing details of the private placement within 15 days of the transaction taking place. This can be sent by mail or electronically filed over the Internet using the EDGAR system. By carefully making sure your offering conforms with one of the variations of Regulation D and filing a simple form online, you're able to raise funding from venture capitalists, wealthy accredited investors, and others without having to subject your company and your lawyers to the process of registering your shares with the SEC.